Second schedule, part 1, professional misconduct in relation to CAs in practice. Clause number 1, confidentiality. A CA should not disclose confidential information acquired in the course of professional engagement. We can share with client or on client consent with third party or if it is required by law. Disclosure of information. If it is covered as a part of professional duty, covered in engagement letter, then it is not a misconduct. That is, if engagement letter specify sending information to RBI, exchange control authorities, then it is fine. In other cases, if it is not specified in engagement letter, then consent of a client is required by competent person. Competent person for a proprietor firm, proprietor himself, for partnership firm, any partner, for company, board of directors, if power is delegated, then MD. Sharing a working paper. Ownership. Each auditor is owner of its own working papers, whether principal or subsidiary or branch or internal auditor. They are not under obligation to share working paper with principal auditor, etc. Client's consent. At his discretion, CA can make portions or extracts of working papers available to client or with client's consent, make it available to regulatory body. Evidence Act 1872 are unlawful acts by client or tax evasion. Next, contradiction with NOCLAR. As per this clause, no disclosure can be done unless covered in two exceptions as discussed earlier. But NOCLAR says in exceptional circumstances, as discussed in NOCLAR, disclosure to authorities can be done even if not required by law. There is no clarification over it at so answer as per respect to requirements then till then. Cases reporting non-compliance of Companies Act to ROC not allowed. Bank manager is asking for audit working paper files to approve loan not allowed. Sharing client secrets in program of Chamber of Commerce not allowed. Authorities like ROC, SEBI, IRDA, RBI interrogating auditor giving information not allowed. Disclosure to shareholders or incoming auditor not allowed. Next, clause 2, review or examination. An auditor is not allowed to certify or submit report on financial statements unless examination or review of such financial statements and its records is done by CA himself, partner, employee in supervision of a CA within the firm and another CA in practice outside the firm. Cases. If there is a situation that audit is not properly done for a particular area or item, it will attract three clauses. Clause number 7 for a grossly negligence. For a gross negligence, clause number 8 for not obtaining sufficient appropriate audit evidence. For clause number 2, that means audit work was not done by responsible person as discussed in the clause. Clause number 3, forecast or projections. An auditor cannot vouch accuracy of forecast or projections, cannot give guarantee or surety about financial performance or position. Forecasts are based on realistic assumptions and projections are based on hypothetical assumptions. A CA can certify or give a report on forecast of the projections. It should be as per SAE 3400. We should comment whether assumptions are reasonable, that is realistic, but not on final financial outcome. Preparing final financial forecast. Preparing final financial forecast as per old guidance note, CA can prepare and report on final financial forecast as per SA 3400. Both the things cannot be done simultaneously by CA. Management should prepare and CA should report. Answering questions. Always look for wordings used in report and answer accordingly. If question is silent, then give conditional answer. Prospectus may contain forecast and projections. While reporting, CA should ensure compliance of this clause and guidance note on reports in prospectus. This will ensure compliance with the Companies Act and SEBI ICDR guidelines. Cases. CA should report on 97 projected financial statements of the individual without verifying basic document. Guilty under clause number 3, 7, 8 of part 1 second schedule. Forecast is based on realistic assumptions, whereas projections are based on hypothetical assumptions. Next, clause number 4, substantial interest. A CA is not allowed to express opinion on financial statements where he or his partner or his firm has substantial interest. Assignments covered under the heading expressing opinion on financial statements covers services given by firm, assurance services, example financial statements, report or certificates, all type of audits involving authentication, expression as on reliability of the information as per financial or non-financial information as per statutory requirements or otherwise as per requirement of the client covered under clause number 4. Consultancy services involves giving professional opinion, documents where final consultancy services are given on behalf of the firm, not covered under clause number 4. Substantial interest. Term substantial interest will have same meaning as discussed under clause number 2, part number 1, schedule number 1. It broadly covers 20% or more. Clarification issued by counsel with respect to substantial interest. Client is not a company, that is proprietor or a partnership. If client is a proprietor or partnership, CA himself is proprietor or partnership, not allowed. Partner or relative of a CA or proprietors are having substantial interest in partnership, not allowed. Client is a company. ICA has clarified in following disqualifications there is issue of substantial interest. Disqualification of officer or employee, disqualification of partner or employee of officer or employee, disqualification of holding security, disqualification of relative being KMP, key managerial person or director, not allowed. Old simple clarification. CA who is in part-time or full-time lecturer, auditor of college, not allowed. CA employee, auditor of employer, not allowed. Partner of CA is trustee or employee of the trust. CA cannot do audit of trust. CA is liquidator. CA cannot do audit of company. CA writing books of accounts cannot do audit of same enterprise. CA, who is an internal auditor, cannot do statutory audit, GST audit, tax audit, cost audit. CA leaves directorship. He cannot become auditor for 2 years from the date of leaving. Disqualifications to become tax auditor is given under section 288 of Income Tax Act 1961. Statutory auditor related points. Statutory auditor can accept a system audit provided it does not involve scrutiny or review of financial data or financial information system. Statutory auditor and tax auditor cannot be valuer of unquoted equity shares. Internal auditor points. Internal auditor cannot do audit of accounting of entity. Internal auditor of the company can become stat auditor of employee provident fund trust. Internal auditor of the employee provident fund trust cannot become stat auditor in government company. Bank auditor related points. Statutory auditor cannot do concurrent audit. Statutory auditor of RRB cannot do concurrent audit of sponsor bank. Statutory auditor cannot do stock audit of the same bank or sister concern. Statutory auditor credit card outstanding amount after due date should not exceed 1 lakh. Statutory auditor cannot take loan against FD. Compliance and verifications before accepting audit. Check compliance before acceptance. Statute, governing entity, partnership deed or trust deed or instrument under which entity is constituted. Verify before acceptance. Approval of regulatory authorities as required under certain cases like cooperative society, etc. Resolution passed by managing committee or board of governance or trustees. A letter of appointment signed by proprietor or partners. Relative, here definition of relative will be as per Index 24. Father, mother, brother, sister, son, daughter, spouse. Clause number 5. Material facts is not disclosed. Material fact is not disclosed in financial statements, which is necessary in making such financial statements. This matter is known to CA, who is going to report on such financial statements. If CA fails to disclose this matter in his report, he will be guilty of professional misconduct. Materiality. It should be as per SC 320. C amount as well as nature of fact. See from point of view of balance sheet as well as P&L. Assignment coverage will be same as per clause number 4 above. Next cases. Asset related. Property is mortgaged, but details of charge not disclosed. Liability related. Non-creation of sinking fund as per debenture trust deed. Company took loan from Employee Provident Fund Trust, but it was not disclosed. Auditor disclosed this information to Board of Directors and trustees, but not in the audit report. He will be guilty of professional misconduct. Notes to accounts related, contingent liability not disclosed. The auditor will be guilty of professional misconduct. Clause number 6. Material misstatement in financial statements. Material misstatement is present in financial statement. This matter is known to CA, who is going to report on such financial statements. Misconduct or guilty. If CA fails to disclose this matter in his report, he will be guilty of professional misconduct. Materiality, same as clause number 5. Assignment coverage, same as clause number 4. Cases, understatement of understatement of liability or provision or contingent liability. Second, statement and certificates submitted to tax authorities are misleading and incorrect. Third, issuing wrong certificate for end use of funds to the bank. These are all material misstatements in financial statements. The auditor will be guilty of professional misconduct as per clause number 6. Next, clause number 7, gross negligence. Guilty or professional misconduct. A CA shall be guilty of professional misconduct if he is grossly negligent and not exercising due diligence. Cases, repeated failure to represent client before tax authorities. Auditor fails to detect fraud which were apparent, obvious, or there are indications with respect to fraud. Not able to complete audit as per given time schedule and statutory requirements. Signing balance sheet and P&L before approval from board of directors. Signing two balance sheets by applying different judgments for same company, same period. Giving opinion subjected to separate notes, but such notes did not exist. Sending audit report through value paid post, COD, that is cash on delivery. More cases, asset related, fails to report that some entries in the passbook has not been passed through cash book. CA gave clean report, but report on special audit revealed irregularities in cash balance, arbitrary valuation of closing stock, and no verification was done. Grossly negligent. P&L related. Certificate issued in respect of turnover of betel nuts, even when client is not dealing in betel nuts without checking books of accounts. Grossly negligent. Next, clause number 8. Obtain sufficient information. Guilty or professional misconduct. CA fails to obtain sufficient information for expressing opinion, fails to negate expression of opinion, disclaimer, where exceptions are sufficiently material. Exception means inability to obtain evidence. In such a case, such CA will be guilty of professional misconduct. Assignment coverage, same as clause number 4. Cases, blind reliance on internal audit in some area, issued certificate of circulation without seeing elementary details, didn't check investments because opening and closing balance were same, issued wrong consumption certificate without examining stock list register. Multiple clauses. When CA fails to obtain adequate evidence about particular financial items, then apply clause number 7, 8, 2. Next, clause number 9, audit procedures. Situation, material departure not following from generally accepted audit procedure. Then auditor will be guilty of professional misconduct if he fails to disclose these matters in his report. Generally accepted audit procedures, engagement and quality control standards, statements, guidance notes, general clarification, practice manuals, studies, and other papers. Inclusion in audit report is not solution for failure to do audit. Auditor is supposed to perform his duties properly as per SCS, etc. If he fails to do so, then merely giving reservation and qualification in audit report is not the solution. He will express two reasons, and if he justifies that it is because of circumstances or management, etc., only then he will not be guilty. Assignment covers same as clause number 4. Cases, did not conduct sample checking of bank accounts, did not carry out vouching of transactions, did not verify actual payments for purchases, just relied on bills, did not check bank column totals and contra entry transactions, resorted to test check, that is sampling, even when there are no internal control and risk is high. Multiple cases. Whenever CA fails to perform particular audit procedure, clause number 7, 8, 9 is applicable. Particular financial item, clause number 7, 8, 2 is applicable. Particular audit procedure, clause number 7, 8, 9 is applicable. Both the things are pretty close and two sides of the same coin. Cases may contain both the issues. Apply combination of the clauses which you feel the best. Next, clause number 10, separate bank account. Money received. Fees or remunerations, including advance received, there is no restrictions. The auditor can keep it in common account, use it as per requirement. If the money is received for expenses intended to be spent in short time, there are no restrictions. Auditor can keep it in common account, should be used within reasonable time for proper purpose. Money received for expense of other expenses, it should be kept in a separate bank account immediately, should be used within reasonable time for proper purpose. If money is received for other purpose, keep it in separate bank account immediately. Example, if received in capacity of liquidator, trustee, etc., for buying or selling property or investment, keep it in separate bank account immediately. Should be used within reasonable time for proper purpose. Cases, money received for investments deposited in CS savings account and no investment made within 3 months, guilty under clause number 10. And no investments made within 3 months, guilty under clause number 10. Money received to pay advance tax over the year deposited in CS savings account and used for birthday party and redeposited before year end, guilty under clause number 10. Various amount gives by client not accounted properly and not deposited in separate bank account, guilty under clause number 7 and 10. Second schedule, part 2, applicable to CS in general, that is either practice, service, or others. Clause number 1, contravention. A CA contravened provisions of CA Act 1949, regulations issued under CA Act by ICAI, guidelines issued by ICAI. Then he will be guilty of professional misconduct under Schedule 2, Part 2, Clause number 1. If contravention is not covered under any other clause, then it will be covered here. Specific overrides general. Regulations related to articles. Articleship registration related. Don't take, don't ask for premium, don't ask for security deposit from article or his father, don't ask for a loan from article or his family business, don't register without COP or beyond vacancy. Working hours related. Flexible hours withdrawn. Office hours shall not start after 11 a.m. or end before 5 p.m. Office hours not before 9 a.m. or after 7 p.m. Working hours shall be 35 hours in a week, excluding lunch break. If there is exigencies, that is need or demand, working hours can increase but not beyond 45 hours per week. Further, compensatory leaves shall be granted for hours exceeding 35. Other work related, without prior permission from ICA, cannot pursue other course or training or job, business or occupation, not attend college or other institution during normal working hours, take into account travel time. Stipend related, regulation 47. Stipend should be paid monthly in bank account, either through account paycheck or depositing cash. Regulations related to CS. Complete CP, continuing professional education hours, advised not to take coaching classes between 9:30 a.m. to 5:30 p.m. Obtain peer review certificate for audit of listed entities. Put FRN or MRN urine on all reports and certificates. Guidelines. If there is misconduct under Council Guidelines 2008 or Council Advertisement Guidelines 2008, if it is not covered under any clause, always apply this clause along with guidelines. Cases. Almost all cases covered above. Certain cases apart from above are articleship registration form not forwarded to ICAI as per regulations. Guilty. Signing or issuing reports or certificates without COP is contravention of Section 6. Guilty. Accepting audit even when undisputed fees is unpaid. Guilty. Signing 468 tax audit reports not as per council guidelines. Guilty. Clause number 2, confidentiality. Applicable. Applicable only to CS in service of company, firm, person. Not allowed. Not to disclose confidential information acquired in the course of professional employment. Allowed. We can share with employer or on employer's consent with third party or if it is required by law. Similar, all the points as same as discussed in clause number 1, part number 1, schedule 2, except that clause number 1 is applicable to CA in practice, but here it is applicable to CS in service. Next, clause number 3, false information. SCA is not allowed to submit or give information, statement, form written knowing to be false to ICAI, Council, Quality Review Board, committees, appellate authority, disciplinary committee, board of discipline, disciplinary directorate. Cases. To become FCA, CS stated that he was partner in a firm though he was manager. Guilty. Submitted bank empanelment form to ICAI specifying that he is in full-time practice and not giving time to any other occupation, etc. But he was in full-time employment and holding COP without permission. Guilty under clause number 11, part number 1, schedule 1, and clause number 3, part number 2, schedule 2. Clause 4, money embezzlement. Defalcates or embezzles money received in his professional capacity. Guilty. Next, schedule 2, part number 3, applicable to CS in general, either practice or service or others. Clause number 1, other misconduct. A CA in practice or otherwise convicted by civil or criminal court, punishable with imprisonment exceeding 6 months. He will be guilty of professional misconduct. He will be guilty of other misconduct, not professional misconduct. He will be guilty of other misconduct under Schedule 2, Part 3, Clause number 1, imprisonment exceeding 6 months.